Lance Tyler here from ActionKPI. Welcome to the Integrated Planning video series, Agility Track, where we focus on showing you how through integrated planning, you can quickly move from data to insight and insight to action to truly steer business performance. In the previous videos, we demonstrated how Dynamic Services Inc. applied integrated planning by focusing on the performance of the U.S. operations division, isolating the reasons for the drop in the profitability through insights and dashboards, and then developing two what-if scenarios in the planning engine to take action and ultimately change the result to steer business performance and increase profitability. In this video, we want to build on the example and demonstrate how integrated planning can be applied within an actual live divisional performance review. So, to set the stage, we have the divisional CEO, VP of Sales, CFO, and VP of Ops within the performance review meeting, discussing the latest results and forecast. Enter the CEO.
Let's get right to it. We are here to discuss U.S. operations performance. Can someone explain to me why we are falling short on budget? And more importantly, what actions are we taking to bring it back in line?
As we know, in the second half of the year, revenue is down because the demand is lower, again, due to the pandemic. We are starting to see an uptick in performance in Q4, but again, October is dragging us down. As we can see, we're down about $700,000 from a gross margin standpoint. Let's jump into our customer project summary dashboard so we can explain what's really driving these numbers. Let's start with October. The main cause is one of our top customers, AOC, has been hit by the impacts of the pandemic. And rather than stopping any of our projects, we reduced our rates for senior resources to keep things moving.
From an operations standpoint, there are a number of projects that are generating a loss based on this rate reduction, specifically Project 53, which has the highest number of senior field tech resources assigned to it.
And we're actually losing money on them.
Now that we know the cause, what actions can we take to improve profitability?
The VP of Operations, CFO, and I have been working together on two scenarios. Let's jump to the planning engine and walk through them for you. First one is to renegotiate rates with our customer. Their business is picking up again, and we are confident that we can increase rates. If we go to the standard rates input tab and filter in our scenario, our plan is to increase rates from $60 to $85 starting in October. We realize it's still short on the standard $115, which is why we are confident it is achievable. Let's go back to the income statement. We can see October is currently losing $25,000, but now with that change, we are now making a full K profit.
In our second scenario, we can divert hours from our senior field tech resources to our regular field techs. We are confident we can still deliver excellence. We have been staffing a lot of our projects with more senior staff because of the overcapacity issue. If we select our second scenario, we will increase profitability by $24,000, moving from that $25K loss to just under $1,000.
Well, it sounds like you have a plan to turn this result around. From an overall profitability standpoint, what number are you committing to based on the action plan?
After we factor in both scenarios across all projects, we expect gross margin to increase to $473,000. Again, as we can see in the dashboard. To recap, through integrated planning, the executive team at Dynamic Services Inc. was able to collaboratively work through different scenarios, driving actions to increase profitability in a live meeting. If you're passionate about finding a better way forward or how this could apply to your organization, then please get in touch as we'd welcome the opportunity. Thanks for watching the video. Please be sure to subscribe to our newsletter and check out the Modern Finance Professional Forum in the link below, as we have lots more videos, events, and content coming your way.